So in this lesson, you are going to learn IAS 16, which is property, plant, and equipment. So basically, when we talk about IAS 16, which you know most by the word property, plant, and equipment, we are talking about the standard which you have to expect that this standard, it won't be only IAS 16. It will combine with the other standard that you also have to take note of. So in this question that I have for this lesson, IAS 16 will have a deferred tax, which is in terms of IAS 12. It will have IAS 36, which is impairment loss, and we have some portion of IFRS 16, which is lease contract. So in this question we have two different session. Then we have the first session, which is this one, that we are going to do a property and plant equipment note, and we have other session with other principle that we are going to do a journals. So let's start with the one that we have to prepare PPE note. So let's go through the transaction, then we prepare PPE notes using some of the principle, then we proceed. Okay, Resale Limited is a company based on Vembe district, Toyando. The financial period of Resale Limited end on 31 December 2017. Below information is extract from financial record of Resale Limited for the financial year ended 31 December 2017. So it's very important to know your accounting period first before you proceed. So our accounting period in this case is 31 December 2017. So below is information extracted from financial record of Resale Limited for the financial year ended 31 December 2017. Then on 1 August 2017, Resale Limited bought machine for 3,703,000 for cash. A further 7,500 was incurred to install the machine on the same day. According to the local environmental law, Resale Limited is required to dismantle the machine for 5 years from installation date at a cost of 350. The machine is depreciated over 5 years on straight line method to nil residual value. So let's deal with the first transaction first before we proceed. Alright, if you check, this transaction have almost 6 lines. So we have to analyze it so that you will in full marks from this transaction. Okay, let's first deal with the first part. The first part, the machine was bought for cash for amount of 3,703,000. We must first do calculation. Cost of machine. Then we show the calculation. Okay, in our calculation we're gonna have 3,703,000. Then we have to add other additional cost. Why? Because they say a further 7,500 incurred to install the machine. Installation form part of a cost. Then we have to add it 7,500. Then we have other costs that they said according to local environmental law, Resale Limited required to dismantle the machine for 5 years from installation date at a cost of 350. Okay, let me first explain what is happening in this case. So this is mostly happen on plant or machine. This cost, in other words, for example, the government or municipality is allowing you to do a pollution, which means that, okay, if you can check, for example, we have companies that produce vehicles. If you go to those companies when they are producing a vehicle, you will find that there is a pollution that is happening. That pollution is damaging our environment. So when, as a company, when you are damaging environment, you have to pay a certain amount to be allowed to damage an environment. So this is why we have this dismantling cost. So according to the local environmental law, Resale Limited is required to dismantle a machine, which means that this machine is in somewhere somehow is going to destroy our environment. So that's why they are required to do what? To dismantle. So if they don't pay this amount of dismantling cost, they're not going to be allowed to use this machine, which means that this cost is very important, or is form part of attribution cost. So it must form part of what? Of our cost. All right. Then the next step now, this 350 is for 5 years. Is for 5 years. And remember, when the principle of IAS 16 said, when we record the cost price of PPE item, we have to recognize it using the present value. So the amount of 350 is for after 5 years, which means that this is a future value after 5 years. We are looking for the present value amount so that we will comply with IAS 16. All right, which means that we have to convert this 350 into present value. All right, let's calculate. We have to go to our financial calculator and say present value will be equal to, we don't know, is the one that we are looking for. Then our PMT will be 0. We don't have PMT in this case. We only have a future value. We have a future value of 350. Please don't do mistake and do this 350 as PMT. It's not PMT because we are not paying this amount each and every year, but it's for after 5 years. So that's a future value. Then number of year to dismantle is 5. It's 5. Okay. Then we must have I. I must be given. So I think I missed something when I copy and paste this question. All right. I we're going to use 12 as per transaction number 2. The interest rate implicitly in the contract is 12%, which means that the current interest for this year was 12%, which means that our I will be equal with 12%. Then after that, you compute present value. All right. The other thing, if you want to get the present value which is positive, please make future value negative so that you will get the positive amount of present value. All right. So myself, I don't have a financial calculator. So let's just estimate that a present value is 250 so that we can be able to proceed. Please make sure that you recalculate this using your financial calculator so that you will get the correct figure. Then we're gonna have 3,703,000, then plus 750, 7,500, then we plus present value that you calculated. In this case I wrote 250,000. Then our cost price of machine will be equal with 3,960,500. So this is the cost that we are going to recognize in our PPE item. Okay, let's check. This machine was purchased during the year, which means that at the beginning we didn't have any machine, we didn't have any accumulated, we didn't have any current value, but at the moment we have addition. Then on our addition we're gonna write 3,960,500. This is our addition. Then remember, this machine must depreciate. We have to calculate depreciation. They say the machine is depreciated over 5 years, straight line method to nil residual value, which means that we have to divide. Okay, let me write it here. Our depreciation, it will be 3,960,500. Then we divide by 5 of useful life. Don't forget to count a month. Why? Because it was purchased on August. Then we had this machine on August, September, October, November, December, 5 months. So that we are going to multiply by 5 over 12. Okay. Let me try to calculate it. 3,960,500. Okay. Then we divide by 5 years. Then we multiply by 5 over 12. Then you're gonna get the depreciation of 330,041. So we go to our statement on a note, then we write in a negative form because depreciation reduced the value of the assets. Okay, then in this case we don't have a impairment. So our cost at the end will stay 3,960,500. Then our accumulated depreciation, because we didn't have anything at the beginning, it will be stay like this. Then we get the carrying value at the end. We have to take our amount, then we subtract 33041. Okay, let's calculate. Okay, then our current value, it will be 3,630,458. Okay, we are done with the part of machine. Now let's go to a lease building. Please make sure that you show the calculation so that you in the full marks. Okay, then on 1 September 2017, Resale Limited entered into lease contract in terms of IFRS 16 with PAR letting for a period of 5 years. Then the lease agreement for leasing a building to be used for administrative purpose. The contract require Resale Limited to pay an amount of 380 per annum in RS. The interest rate implicit in the contract is 12%. So in this case, we have a lease which there is no any option, is either option to purchase or either option to extend. So this is a straightforward lease because they already told us that the transaction meet the requirements of IFRS 16. So what we are going to do in this case, we simply have to calculate the present value because we have to get the cost of the building. All right, then the lease is for 5 years and our PMT is 380, then our I is 12. Okay, let me show the calculation of lease. Okay, we have to calculate the present value. We are looking for it. Then our PMT is equal to 380 then our future value, it will be none. This is only found if there is a option to purchase and the chance is high. Okay, then our I is 12%, then our N is 5 years. Then please use your financial calculator and get the present value. So in this case, let's just estimate that the present value is 800,000 so that we can proceed with the principal. All right, then we're going to have 800,000, which is an estimation because it was purchased because we started to lease it during the year. We have to put it on addition. Okay, then the depreciation, we are going to calculate depreciation using our N, which is 5 years. Then we divide by, we have to say 800,000 or the present value that you get divide by 5 years. Then you also have to multiply by a month. Okay, how many months? September, October, November, December is 4 months. Then multiply by 4 over 12. Then you're gonna get a depreciation of 53,000. There's no impairment on lease. Okay, then our balances at the end, it will be 53,000. Then you will get 747,000 as a current value. Okay, let's go to the last one so that we'll go to the next question with deferred tax. Okay, Resale Limited bought delivery vehicle on 1 July 2016 for 1.5 million. So this delivery vehicle was purchased last year, which means that we have to recognize the cost at the beginning. It was there at the beginning of the year. Then accumulated depreciation, we have to calculate depreciation for the previous years. So it was bought by 1.5 million and residual value was 250. Then the depreciation, they use 5 years. Okay, let's calculate the depreciation of last year. We have to calculate depreciation from 1 July 2016 until 31 December 2016 so that we get our opening balance of accumulated depreciation. Okay, 1.5 million. Then we have to subtract residual value of 250. Then we divide by 5 years. Then we count from 1 July to December is 6 months. 6 over 12. Then we get depreciation of 125. So please make sure that you show this calculation on your workings. Okay, what is happening here? Okay, accumulated is 125,000. Okay, let me. Okay, I don't know what is happening on this document, but it's giving me error. Okay, it's not a problem. So cost at the beginning it was 1.5 million. Then we have to subtract accumulated depreciation. Then 1.5 million minus 125. Let me calculate. Then you get 1,375,000. Okay, then under movement, addition, we won't have anything, but depreciation, we're gonna have it. Remember, it's 1.5 million the cost price. Then write down this calculation. Then 1.5 million minus residual value of 250,000. Then you divide by 5. In this case, we won't count a month because it was there the whole year. Then the depreciation is 250,000. Then no impairment. Then after that, I think to calculate the cost at the end, it's not that difficult. You just copy 1.5. Okay. This document is giving me error. Okay, the cost at the end, it will be 1.5 million. Then accumulated depreciation, you have to add the one from beginning and during the year. Then it will give you accumulated at the end. Then after that, you will subtract the cost price less accumulated depreciation. Then you get the carrying value. Okay, I hope the question 1 we are done. Let's go to question 2, that you have to learn IAS.16 with the relevant standard. Okay, so question 2, they said prepare the journal entry to record the transaction in the financial record. That is for 30 marks. Then NB, refer to the marks allocation per transaction for journal entries. Okay, then let's start with the transaction number 1. It's only 3 transactions but 30 marks. Okay, on 1 January 2016, Clips Limited bought machine for 2,223,000, which is VAT inclusive. According to the local environmental law, Clips Limited required dismantling the machine in 5 years, cost of 180. The machine is depreciated over 5 years on straight line method. SARS calculate wear and tears using 4 years useful life. So in this case, we have a defer tax. Okay, what to do? What are we going to do first? Remember, firstly we have to account for the cost price which has been paid. Okay, we are going to say debit bank SFP, then we debit VAT input. Okay, apology for this. We have to debit we purchase machine. Then we credit because they didn't specify whether it's a cash or credit, you can say payable or you say bank. It won't have any effect. SFP. Okay, now we have to allocate the amount. The amount which was payable is 2,223,000. 2,223,000. Now the machine must be recognized without VAT, which means we have to calculate by saying 2,223,000 2,223,000, then we multiply by 100 divided by 115. Then you will get the amount of 193,043. Okay, then the VAT input is either you say 2,223,000 multiplied by 15 over 115, or the difference between these two amounts, 2,223,000 minus 1,933. Okay, let me calculate. Okay, then the VAT input is giving me 289,956. Okay, yes, this will give you 3 marks. So which means we are not done with this transaction. They said according to the local environmental clip, limited is required to dismantly over 5 years of 180. So this is the similar one that we're doing last. I'm not going to explain much about this one because it's the same. So we are going to debit dismantling cost, because this one is going to form part of PPE cost price, SFP. Then you credit provision for dismantling cost. This one is liability, SFP. Okay, so the amount, simply you have to calculate present value. Then our N is 5. Then our I, on addition, they say the discount rate is 10%. Okay, which means that we're gonna say our I is 10%. Our N is 5. Then our future value, we've been given that amount is 180. Is 180,000. Then you calculate your present value. Then for example, okay, this is the calculation. It must be inside the brackets. Okay, let's say for example you got 150,000. Please make sure, be careful, because this amount is in estimation. You have to calculate using your financial calculator. If you got 150,000, so each and every time when you calculate the present value, the journal for interest must follow. It doesn't matter whatever that you are calculating, which is a present value. Please make sure that the interest calculation is following. In other words, when you calculate the present value, simply means that you want to separate future value from what you want to you are trying to separate original amount with what, with interest. When you calculate the present value, you are taking future value and subtracting what, the interest. So the interest journal must follow after each and every present value that you are calculating. If you don't do that, you are going to lose a lot of marks. Okay, interest expense, we are going to calculate the interest from present value. 10% of 150 is 15,000. Then you credit provision for dismantling cost. Remember, interest increase the liability. 15,000. Okay, we are analyzing this transaction. We're still moving. Then the other part, they say the machine is depreciated over 5 years, straight line method. We have to calculate depreciation first. So this machine was bought at the beginning of the year, because our current year is ending December, so it was purchased January. So we are not going to count a month. So let's calculate depreciation. We have to debit it and credit accumulated depreciation. So how are we going to calculate depreciation in this case? We are going to add 1933, the purchase price without VAT. Then we add dismantling cost of 150, or the amount that you calculate of present value. Okay, let me try to add them on this side. 1933043 plus 150. Okay, it's giving me a 2 million. Okay, 2,083,043 rand. So this is not depreciation, it's the cost that we are going to use to calculate depreciation. Then we divide by 5. Okay, we divide by 5. So the depreciation, it will be 416 and 609. So that's our depreciation. Even on this side, on the credit side, we will come and credit amount of 416,609. Okay, now remember, in this case we have a deferred tax. SARS calculate wear and tears using 4 years of useful life. So let's check if we're gonna have any temporary different. Yes, we're gonna have it. Remember, in accounting books we are using 5 years to calculate, but in tax they are using 4. So I don't think the amount will be the same. Okay, 2 million divided by 5. Okay, apology, it has to be 2,083,043. Then we divide by 4. Then we're gonna get 5,020,760. So there is a difference in this case. So let's check. Let's analyze it down. in our current value, this is the books of the accounting, we have 416609. Then tax base, we calculated the amount of 520 760. So what happened in this case? We're gonna have a liability because in this year we claimed less amount in our accounting books. Current value, we claim less amount, which means that our income was higher because we deducted the small amount of depreciation instead of high. So in this case, we are owing SARS, we're gonna have deferred tax liability. We are going to debit deferred tax, which on the debit side it will be P and L. Okay, then on the credit side we're gonna have deferred tax of SFP. Okay, then let's calculate the temporary difference. The temporary difference is 520 minus 416,609. Okay, then we have 104,000, which we have to multiply by 28%. Then we're gonna have the deferred tax of 29,162. So if you're not understanding what is happening on deferred tax, please go to my videos and check deferred tax introduction. That's where I have explained more details about deferred tax. So if you check, we have analyzed this transaction. Now you can be able to see how we get the 13 marks. Okay, let's go to number 2. On 2 January, Clips Limited purchased delivery vehicle on credit at a cost of 600,000, which will be paid on 31 December 2016. Useful life of delivery vehicle is 5 years using straight line method with residual value of 65,000. SARS calculate wear and tears of 5 years in delivery vehicle. Okay, let's analyze. Firstly, at the beginning of the year, this company purchased a delivery vehicle on credit by 600,000. That will be paid in 31 December 2016. This transaction is not easy the way you think. Why? Because we purchased on credit at a cost that we are going to pay 600,000. Simply means that this amount has include the interest. Why? Because we are going to pay on 31 December 2016 and we have been given the delivery vehicle on 2 January, which means that this amount of 600,000 is not worth the same amount as at December, which means that we have to convert back this 600,000 at the present value, because the principle in terms of IAS 16, it says we must record the cost at the present value. We have to look for the present value of this transaction. Remember, we are doing accounting standard, which is not the same as what you were doing from high school, so you must adjust with changes. All right, present value is the one that we are looking for. Then future value, we have it, it's 600,000. This is not PMT, it's future value. PMT, in this case, we don't have it. Then our I is 10. Then our N, we have to check when are they going to pay. From the day that we get the machine until the day that we are going to pay. It's from 1 January until 31 December 2016 is only 1 year, which means that our N will be 1. Then the present value that you are going to get, we are going to debit delivery vehicle and credit payables. Then you record the amount that you got when you calculate your present value. Please make sure that you recalculate for practice purpose. Okay, let's proceed. Then the useful life of this delivery vehicle is 5 years with residual value. So residual value is 65,000. Then SARS calculate wear and tears of 5 years in delivery vehicle. Simple means that even though the year are the same in accounting books and SARS books, it will not be the same. Depreciation will not have the same amount as wear and tears. Why? Because in terms of SARS, they don't calculate wear and tears. They don't calculate using residual value. Only in accounting that we are going to subtract residual value when we calculate depreciation. So please make sure that you complete this one. Then number 3, a plant with the cost price of 850 purchased on January 1, 2015 has a value of 550, value in use of 550, and fair value less cost to sell of 590 on 31 December 2016. Then the plant depreciate using straight line basis with 10 useful life. SARS allow wear and tears of 50,000 on year 1, 30% year 2, and the remaining on year 3. So on the last transaction, we have a certain standard that we have to apply. We also have a impairment loss that we have to apply. Okay, so this video is gonna make so long and I won't be able to upload it if it is become more than an hour. So I'm gonna create another video and proceed with number 3 and other transaction that I will try to add, so that you will be able to understand how to account for deferred tax when there is a impairment loss. Okay, for this video let's stop it here.